So welcome back guys. In today's class once again I'll be taking you to the Learnapp guys where they will teach you how to analyze the option chain, and they will analyze the option chain using the free tools like NAC website, or you can also do it from your Zerodha terminal. So guys, I'll take you to the Learnapp class on how to analyze the option chain like a pro. And if you do not have the Zerodha account, because they will take you to your Zerodha account, so if you do not have Zerodha account, I'll be leaving the link to join Zerodha in the video description. And also this is a free Learnapp class, but Learnapp also has their own courses. So if you want to join Learnapp courses, don't worry, I'll give you the link to join Learnapp courses also in the video description. So from there you can join Learnapp and you can get more information on trading. So guys, I'll be taking you to the Learnapp class on how to analyze the option chain. But before that, if you are not yet subscribed to me in YouTube, this is the time to subscribe to this channel first.
Hello guys, welcome to Learnapp workshops. So today we are going to look at a very interesting topic. It is one of my personal favorite and I use it regularly for trading. That is option chain. So we will be looking at what option chain is and everything in detail. So basically a quick start about Learnapp. Guys, Learnapp has around 250,000 plus monthly active learners just like you and me, and there are around more than 250 plus courses and live classes. And yeah, everything is in a structured way. If you are a trader, investor, everything is structured. And I guess if you are in this workshop, you are into trading or you are planning to be a trader, yes, we have a very good structure for it. And guys, know your mentor. I am Bharat. I love options trading. I do love it like anything. And then if at all there is a risk management, that's like, if at all there is a holy grail in market, that is risk management and cutting losses. So most of you guys would have known what happened to IRCTC in the last 1 odd hours. So if at all someone didn't cut their losses or book small losses, and if they had taken position intraday, then it would have been a bit dicey day for them. And yeah guys, I am a learner like everyone, and currently I'm learning all about machine learning. And guys, about this workshop, it is a little advanced workshop. That's basically we are assuming you know what options are, because that will make the process very easy. But still I will try to make it very simpler, and then recording would be provided. And if at all you have any doubts, you mark all attendees and panelists, and there would be Q&A section at the end. And guys, this all other topics which we will be looking at, it's all about option chain in detail. So basically we would be seeing the construction of option chain, then we will be reading option chain, identify liquid stock, trend position bills in bill using option chain, and maybe smartly we will try to take some trading decisions. So guys, a promise, you will know what option chain is by the end of this workshop. And that's all. And also guys, this is a standard disclaimer. That's like charts shown here are for educational purpose, and please don't take anything as trade recommendation. We completely believe in this quote, that is like, give a man a fish, you feed him for a day. Teach a man to fish, you feed him for a lifetime. And guys, are you excited? It's my favorite topic, and I should see chats roaring. And if at all you have a notebook, pen in your hand, please take a note of it. It would be very useful in your trading career. Yes, great guys. So guys, first of all, this is the explanation of option chain. But yeah, I will just maybe try to say what exactly it is. An option chain? No, I am not. So guys, what are the two types of options available? You guys can actually text and tell in the chat box. Two types of options which are available. Call put, yes, great. That's great. So what we will do is like one side we will put as call, the other side we will put as put. So we know, right, any underlying we take, be it Nifty, Bank Nifty or any FNO stocks, there are multiple strike price, multiple contracts. So for example, in our case, let's take a stock can be XYZ, which is trading at 10, just an example. There would be multiple, which is trading at 50. So there would be multiple strike price, 10, 20, 30, 40, 40, 50, 60. So let's assume now it's trading at 30. So basically what happens is the current script which is trading at 30. So this is the script which is trading at 30. So 30 would be ATM. I believe this is something which we know. We are assuming we know this. And for call, this would be ITM. For put, this would be ITM. And this would be OTM. So by the way, this is how an option chain is constructed. Basically, it's very simple. One side it's call, one side it's put, and all the strike price are in between, and the price which is trading, that is ATM. This is actually an option chain which we ourselves have done it. So then what we will do is, so guys, if at all a stock is, like for example, in this option chain, 30 is the ATM, we need to know two things. What is the price of the contract, right? What is the price of the contract and what is the open interest billed? So first understand the price of the option premium price. That's basically if you are planning to buy for 30, and if at all 30 is trading, LTP, we call it LTP, last traded price. Last traded price is around, let's say 100 to make it a bit easier. So if it is 100, it won't be 100, let's make it 40. So if it is 40, that is called LTP. That's like current trading price. So guys, so is the, okay, one sec, I'm getting some messages. That's like just slide left on yours. What happened? Sorry. Okay. Okay guys, okay. So we need to see the pricing, option pricing. So that will be seen by LTP. And then we also look at another criteria, that is open interest. So what is open interest? We will look at what open interest is. Open interest is the number of positions built in the market. That's basically, there are two, for any contract to build, there are two players. That's like an option buyer and a seller. When both of them come together, one position is built, and this would also be mentioned here. So basically in the option chain which we have done, we saw there is two sides, a call and a put, and then we saw ATM would be in middle, and then all the strike price laid out. Then there would be two things which would be looking at. For put side there would be an LTP, and for call side there would be an LTP. Then there would be OI here and open interest here. So yes. So basically this is the complete option chain which we are actually looking at. And how does this look like? So this looks like something like this. So basically this is from the NSE site. I have put the NSE site also there. So can you see this particular area where the option contracts name is, for example, if it is Nifty, Bank Nifty, Fin Nifty, it would be mentioned here. If it is the symbol, that's basically any FNO symbol like HDFC Bank, Reliance or anything, which would be here. And then options comes with an expiry. That's basically if it is a weekly option, every Thursday, or if at all there is a holiday on Thursday, it would be the previous day. And if it is a monthly, last Thursday of the month would be the expiry date. And then comes the strike price. Strike price is this particular thing which we saw, right? This 10, 20, 30, 40, 50, 60 in our option chain which we constructed. So this is how, this was a basic Nifty's option chain. So there are a lot of other things. Let's understand what are they, and let's try to make sense out of it. So guys, so far any doubt? Okay, that's great. Oh, that's great. That's great. So guys, if you can see in this option chain, we can see this call put, and then there is this strike price thing. And for example, one sec. For example, here Nifty is trading at 18,500. So this particular area, these two are near ATM. So this is ATM. This is ITM. This is ITM. This yellowish color is ITM for call, ITM for put. And this is OTM for put. This is OTM for call. So then we saw the LTP. LTP is the last traded price. That's basically what was the last price the buyer and seller agreed. And if at all one buyer and seller agreed, that comes to this OI. OI is open interest. So then change in OI is also mentioned here. Change in OI is nothing but what was the change? If at all there was 10 position yesterday, what is the change in OI today? So it can be positive or it can be negative. Can you see there is a positive side here and there is a negative side here. Then comes volume. Volume and OI kind of looks similar, but OI is builds on like the position for the everything. That's like there is one expiry, right? Every OI would be different. That's basically not different. Every time the OI will stack up. That's basically if new position is built up, the OI will increase. But volume is not so concrete like OI. It tells on intraday basis. But it's like if at all this option had 100 volume today, tomorrow again it will start from 0. But open interest is not that case. If it has 100 contracts today and tomorrow if a new contract is added, that's like open interest goes up 101, 102. It will go like this. Then comes IV. IV is implied volatility. For now, let's not get into it. Currently, we wouldn't be using it. And then comes the ask, like bid quantity, bid price, ask quantity. So bid quantity is how much quantity someone is interested to buy for, and what is the price they want to buy for. So it would be very near to LTP. If it is very far from LTP, then it means this is not a liquid option. Then comes ask price, ask quantity. That basically means how much someone is asking for, someone is selling for, someone is buying for. So bid ask is that, and that's exactly is replicated in put side also. So this is the basic construction of option chain. So from this we can make a lot of sense. So guys, in this, for example, in call side, which option has a lot of which contract, for example, which contract has a lot of position build? Okay, Selvi asks, can you explain the volume? Volume is basically how many options were traded for that day. For example, today is 19th October, right? If at all 100 people had got options today, it would be 100. But OI will continue for days to days. Okay, so yes, you guys are right. Most of you guys said in 18,500, most contract is built. That is like 84,854. And in put side, what is the maximum contract built? You guys can drop it in chart. What is the use of volume in analysis? Vilas, volume plays a pivotal role. That's like if at all you are a option trader or if you are an intraday trader, if at all there is a lot of volume, that basically means people are interested. So with open interest, you can actually add another layer, volume, but that gets a bit complicated. For now, just see two major things, that is price and OI. Maybe once you master this price and OI part, add volume to your filter also. Okay, Jayanti says, please explain open interest. Okay, Jayanti, open interest is nothing but how many contracts are built. That's basically, for example, 18,500 is the strike price, and let's assume there is no OI at all. And if at all I want to get one contract of 18,500, what I will do is I will place a bid. That is basically I will say I want one lot of Nifty is 50. I will say I want one lot of Nifty for say 102. And if at all one seller comes in and the order gets filled, that basically means one contract is built, and that one particular contract is called open interest. So one open interest is built. So Jayanti, is the part OI is clear? Okay, then Nivas asks, can we use OI to trade intraday move? If possible, can you explain today's fall in Nifty or IRCTC? Nivas, yes, I personally use open interest also as a criteria. That's not the only criteria. I layer it with other thing and then I use it for my trades also. Sometimes mostly are intraday. If you are getting into OI when it comes to option, for sure you can. Okay, Krishna asks, how does one find out if particular strike price in CE, PE or longs or short based on OI and OI changes? Yes, we will check, Krishna. We will come to that also. And then, okay, Sneha says, IEX also sharp fall in the last 20 minutes. Yes. Sir, please continue with class. Okay, sure, Aditya. We will do that. And I guess if at all there is any other questions, we will take it at the end. So guys, first is like identifying liquid scripts. So guys, what does this liquid script means? Any, like if you guys don't know it, maybe type no or no. Okay, let me tell what is liquid script is. Basically, if I want to get into an option and I place a buy order, and if at all there is no seller, then that would be a problem, right? This particular thing is called liquidity. Liquidity, basically, if you get into the market, you should be having enough of buyers and sellers together, and that is how we find, that is how we say this is a liquid script or non-liquid script. So basically, we just look at the bid-ask spread. So what is bid-ask spread? We in our option chain we saw, right? One sec. In our option chain we saw, right? The price here is 78.90, and there is a next ask price of 79. So it is just 10-20 paise difference. That's fine. Lot size of Nifty is 50, so that's not a problem. But if at all a stock like, for example, IEX or something, for which the bid price is say 100 and the ask price is 110, that means you are already losing 10 points and the lot size of IEX is 1250. Just getting into that contract, you are making a loss of 12,000 rupees. So this is the very critical thing. Most of us, like even when I started, I used to trade a lot in illiquid script. To understand, I made mistakes. Then I relearned and did this. So what generally we should look at is, we should look at the bid price for both bid and ask price. If at all the thing is very near, then it is a good liquid script. This is one way. The another way is by just looking at chart. So let's try to look at some chart and find what this is. One sec, I will try to share my screen. So for example, this is my terminal, and let's say Tata Motors. Okay, let's say I have Tata Steel. Tata Steel, which is currently trading at 1,366. If you just go look at this chart, so basically you can go to lesser time frame, maybe 10 minutes, 5 minutes. Can you see if it is little smoother comparatively? So this basically gives a rough understanding that there's a lot of trading activity which is actually happening here. But if at all, let's try to go a little deep in the money or out of the money and check how the liquidity or spread is. That's basically What we'll do is we'll go to 1600 CE for October expiry. Again, since it is an October expiry, there is a lot of thing which is happening. But if you go here, can you see there is a lot of up and downs and there is a lot of gaps? So this actually means there is no liquidity at that point of time. And if at all you are getting into any script, if you see this kind of model, that basically means this is not an ideal script to enter. Okay. That's great. So Debashish, is your doubt clear? I guess it's the same. Okay, JNK, what makes OI to go to negative value? OI or OI change? If it is OI change can go to negative value. Okay, Deepak, okay, when you searched on Zerodha, please repeat. So, okay, this is my Zerodha terminal and I am finding the script like currently in Tata Steel, which is trading at 1366. I'm going little away. That's like I'm going to 1600 CE, and in 1600 CE, I'm going little behind to see maybe around 2nd, 3rd of September. And this is how the screen looked like. That's basically there was no liquidity at all. Can you see there is a gap? That's basically there was no trading happening and suddenly price going up, down. So this is happening because of there is like no fill in the order. That's like someone is bidding, someone is asking, but they are far apart. They both are in limit orders. So it is not happening. And that's how we identify illiquid looking at the charts. Yes, because it is OTM. See, Tata Steel is a very good, it's a very liquid script. Maybe if at all you find some script. So guys, in FNO, you guys yourself tell which script all you trade. Okay, Ajay, actually this is a candlestick chart, but basically why it is like this is because this particular time it was very illiquid, so the candlestick is looking very choppy. So that's the very thing. That's very interesting thing. Okay, guys. Is there any audio issues which someone has pointed out? No, that's great. That's great. Thank you, guys. Thank you, guys. So, guys, by this we can identify the liquidity of this script. For sure, if you are trading at Tata Steel, it is a little liquid script comparatively. Anything from Tata is basically bit liquid. I'm trying to find. Okay, so this is how it looks. So let's go to our PPT in understanding the next thing. That's basically the very part which most of you guys are waiting for. So we saw OI and LTP in our option chain which we made. And with the help of these two matrix, we will try to identify the direction of the trend. So guys, a quick yes, if you guys are excited to look about it. That's great. So yes. So guys, it's actually really simple. And I will also tell you how I took one trade. Maybe in my Zerodha terminal, it is still there. I will, no, it's like I have booked my profits, but yeah, that particular trade was actually taken for showing something to you, but yeah, it actually worked out. So when we see the price which is going up and also the open interest which is going up. So basically what is happening, the price of the option is going up of options or also in futures, but this time we are looking at options. The price is going up, it's soaring high and open interest is getting built. So that basically means long build up. That assumes people are expecting the market to go up. And when for that can happen for any strike price, but prefer like if at all it is in ATM, it is really good. And when long build up really happens, what happens is like almost everything would be long build up, long build up, long build up, long build up everywhere. And when it is okay, then we will see the short side of it. That's basically when open interest is rising and price is falling That basically means someone is assuming the price is going to fall, and they are building their positions of short. So that basically means short build up, and then comes long unwinding. We saw, right, someone build that position. After a point of time, they need to book profits. So what they do is they try to book a profit when they feel it is overpriced, or then when they have met their targets, and suddenly you will see this boat falling. That's basically, it was going up, even this will fall, even this will fall. We will try to see this in our option chain also. When this falls, that clearly means this position is getting squared off. OI is also going down. So that means long unwinding is happening. The people who are long on options or on that particular strike price, they are exiting, they are booking their profits. So then comes short covering. So the shorts which were built, so that also needs to be booked, right? So suddenly the price starts going up and the OI starts falling. So that is what short covering means. Short covering. So basically, guys, write down this, and if at all you just understand this process a lot, you can make a lot of difference. So that basically means short covering. So guys, is this 4 things clear? Long build up, long unwinding, short covering, and short build up. Okay, price of the underlying, okay, when it comes to, if you are just looking at futures data, maybe you can look at futures thing. Here you can look at this calls price up and puts price up to identify this particular strike price going up or down. And also you can look at the underlying data also. Both ways are fine. If at all I am doing a positional basis, I look at the underlying and open interest build. If at all I am doing intraday, I do this and I select strike price accordingly. How does open interest helps? So yes, open interest alone doesn't help. It needs to be combined with price to make interpretation. That's basically in this part, we see open interest is going up and price is going up. That clearly means people are going long in the market. And there is one more thing. We saw this whole option chain, right? This whole option chain, if it is basically we have 2 participants, buyer and a seller. And this option chain is looked in the perspective of sellers. And why sellers? Anyone? Okay, Manjunath says, can you please show an example of how you choose price based on OI? Yeah, okay, yes, I will show you that. Okay, Vinay says sellers have more risk. Yes, the first thing is sellers have more risk, and the second part is selling has a lot of probabilities to it. That's basically they make money most of the time. And then time decay, there are like many Greek factors, and if at all smart money wants to go long, they will prefer future because of the delta. Delta is positive +1 in futures, but in options it is very less. That's the very reason option chain, most of us look through seller's perspective, and seller's perspective makes a lot of sense. So now we understood how to look at an option chain. That's basically we should look it in the view of a seller. So if at all there is 100 position bills here, or else 1000 position build here, and if at all there is just 10 position in the put side, so what can happen? So this is the question, guys. You can drop in a comment and tell. If at all in this particular option chain at 30 strike price, there are 1000 people in call side and there are 10 people in put side, what can happen? Market can fall, market can fall. Yes, market will fall for sure. And that is what option chain tells. Option chain gives us this particular edge. This edge is what helps us a lot. And if at all the reverse happen, that is basically if at all there is like just 10 here, and if at all there is 1000, so what will happen now? So now the reverse, bullish move in the market. So exactly this is what happened. And then when we see the change in OI with the OI's LTP and change in OI. That basically gives us an edge of how much how much unwinding is happening and stuff like things like that. So that's exactly what happened in IEX yesterday. So IEX yesterday was screaming bullish. So what happened is, for example, I will open the. So basically, I saw IEX. I will open the open interest. So this is IEX option chain where we can see, one sec. Okay, Pratyush says, can you recommend some tools that can help identify the intraday position build? For sure, yes, we will look at that also, but this in itself gives a very good edge. That's basically NSE's website. This website, you can go and see what is currently happening, and almost all the software, be it any other third-party software, they have a lag of some time, but NSE gives the exact thing. So here, if you can see in open interest and change in open interest, people have actually are exiting from here. So that was actually seen very well in live market, and that's how we kind of make sense that the price there can be a small profit booking which can actually happen. And yesterday what happened was there was a long build up which clearly happened. That's basically what happened is earlier it was 1000. From 1000 yesterday itself, by the end, that's like last 15-20 minutes, this 1000 turned to 20-30, like that. It came very less. And with this logic, I did a assumption. This was one. With it, I combined other things. That's basically price action, other data points, and I took this trade on IEX. So basically this was my position, and it was like just a 10-minute trade, quick trade. This was a learning trade which I wanted to show for you, but fortunately it worked. And this is not the case always which happens in market. So market can do anything crazy. So this is not to be expected in market. But yeah, if you have this particular sense, that's like what long buildup is, what short buildup is, what market is doing, you will get a different edge over things. So guys, do you have, okay, how to identify the sudden fall in advance like it happened in IEX? Okay, sure, Selvi. Then, okay, advance in IEX, basically when the fall is happening, you just look at the change in open interest. If at all there is a change in open interest, if there is a high change in open interest, the position build in market is getting reduced drastically in one side. The whole thing will look very skewed. So if it is very skewed, that clearly means there is something very big which is about to happen. And maybe you should have a look at the option chain when you are, if at all you are trading intraday. And when you trade intraday, you should be looking at which side the edge is, where the smart money is, and that will give you an tip. Even in IRCT, the same thing was actually observed. That's basically before, like just before 2 minutes before the price was actually falling, option chain told that there is something wrong. Okay. Okay, admin, which part you want to understand? Okay. One sec. So yes, this is the board. So basically what happened is there were, one sec. I will just clear this a bit. What happened in IEX, and exactly with this process, you guys can do a lot. So for example, this is ATM. I mostly look at ATM and also what's happening in OTM and ITM also. But mostly ITMs have liquidity issues because of the bid-ask spread. So what happened is in IEX, the ATM strike price initially had 1,000 quantity. This is just a reference number. But suddenly when the market was going, this 1,000 started reducing. This is OI, open interest. This open interest was reducing. From 1,000 it become 600. From 600 it become 100. So this clearly means there is something very wrong. Okay, and this was the reason behind IEX going up. That's basically, you guys said it right before sometimes. That's basically all the writers were exiting. That basically means IEX is about to go up. It's about to give breakout. And identifying this pattern in data can give you all an extra edge. So that is what IEX did. IEX did from yesterday, and today it hit an upper circuit. And by the end, when it was starting to fall, what happened is the same thing happened in put side. So basically put ATM was 1,000. So before the fall, it started falling down. That's basically it went to 100. That's basically 600, 100. And suddenly when it falls like that, that basically means there is something wrong and price can go down. And that exactly is what happened in IEX. Is this part clear? So a quick Sajak, yes, it is a long unwinding which happened. Can we predict market fall or jump in for next day using OI? So basically don't do, if at all you are interested, never go naked in market. Always do option spreads. So basically there is one interesting course in Learnapp from Sensible's founder Abid Hassan. So he teaches us how to actually initiate spreads in market and a detail about what option chain are. So this is the course. So I will never recommend any one of you guys to go naked. Always follow risk management, and maybe after a point of time when you gain enough experience, maybe if you are in market for 8-10 years and you are sure about the market direction, maybe you can do anything. But if not, never go naked. Naked means buying a single leg. That's basically if you are buying just call, that is called naked. But if you buy call and you sell a higher call so that you define your risk, that is called spreads. So that is something which we all should be doing. Okay, Jitin, yes, I did took a naked position, but that was because I was super sure about what I was doing, and also I had a proper risk defined. So I follow my risk management like anything, and if at all market has taught me a hard way that if at all I don't follow risk, maybe I have blown up account in my past. That's the very reason we all grow, right? We all traders. We know the stages of traders. So that's the very reason I say, if at all you are new in market, never go naked. And even I personally don't go naked at all. Very few times when I am super sure, I have a structure to my trades. That's basically I take the complete technical analysis, technical what chart is saying. Then I look at indicators, and then I look at data. Data is like one major data is option chain, which I look at. Along with it, when I combine this all, I make trades. So that's the thing. And if at all you want to learn technical analysis, so this is the course. It is from CMT Vishal Mehta himself, who is actually teaching what technical analysis is. And then about indicators you can learn here. And also one more good news, that's basically this course, more courses are actually getting added in a very less span. So there is a lot happening here. One sec. So we saw that in chart. And so guys, there is a quick recap about what we saw. Let's try to digest this only. We first saw the construction of option chain. We saw two types of options are there, a call option and a put option. Then actually comes the underlying. Then we saw OI, LTP, the price. Then we saw reading an option chain. That's basically what LTP is, what ask bid spread is. Those are all criterias in option chain. Then we saw how to identify liquid stock. Then we saw trend of the underlying. That's basically if at all there is 1,000 here, that basically means there can be like market to go above it can be bit difficult, and there should be some amount of force to break it. And when things start to break this, that is when the trend actually changes. That basically gives us the position build thing, be it long build up, short build up, long unwinding, short covering, everything would be seen because with this option chain. Then we saw trading decision. If at all there is a long build up, we can go for long spreads, and if at all there is a short build up, we can go for bearish spread. So I will not recommend anyone going naked. So guys, that comes to an end of this workshop, and also as always, the end is just the beginning of new world of trading. So if at all you have learned something, if you just know what option chain is, start applying what you learn. Maybe make note of what long build up, what short build up, long unwinding, everything is, and then do observe this in live market for some days. And don't put all your money tomorrow. Trading is very risky. Do check on your risk management part. And also, if at all you need additional edge about what options are and want to know everything about options, maybe refer this segment. That's basically from basics of options to then do the strangle, straddle, iron condor, and this course for sure. So this all will give you a perspective of what options completely is.